PLTR stock. Why Palantir stock can surge 70%. Palantir technology stock could be worth more than $20. Hey there! Welcome back to our channel where we dive into the world of stocks, trends, and potential market movers. Today, we've got an exciting topic on our hands that has been turning heads and sparking discussions across the investment landscape. That's right, we're talking about Palantir Technologies and the buzz around whether its stock could surge by a jaw-dropping 70% and potentially be worth more than $20 per share. But wait, we're not stopping there. We've got a double header for you, as we're going to explore not just one, but two intriguing articles that shed light on the potential fate of Palantir stock. First up, we're delving into 3 smart reasons to buy Palantir stock right now, where we'll uncover the strategic factors that could be driving investor confidence in this tech giant. Then, we're diving into Palantir Technology stock, bull versus bear, where we'll explore the contrasting perspectives on where Palantir stock might be headed. Are you ready to get into the nitty-gritty of Palantir's potential for growth? We've got insights, analysis, and perspectives lined up that might just give you a clearer picture of why this stock is causing such a stir. So, grab your notepads, put on your thinking caps, and let's journey into the world of Palantir stock potential. By the end of this video, you'll have a better grasp of whether Palantir stock could indeed make that impressive climb and be worth that coveted $20 mark. Get ready to explore, learn, and make informed decisions in the ever-evolving world of investing. 3 smart reasons to buy Palantir stock right now. First things first, have you heard the CEO Alex Karp recently? This guy is not your typical run-of-the-mill chief executive. He's got a bold, audacious strategy and is not afraid to shout about it from the rooftops. Karp firmly believes that Palantir has what it takes to be the most important software company in the world. Now, that's some serious ambition right there. But hey, this confidence isn't just empty talk. Karp has some impressive ammunition to back up his claims. Take a moment to imagine an infinite market for Palantir's AI solutions. Yep, you heard that right, an infinite market. Karp is laser-focused on positioning the company as a leader in the AI arms race. And you know what? He might just be onto something big. Now, let's meet Wedbush analyst Dan Ives. He's the one who's likened Palantir to the Messi of AI. You know, Lionel Messi, the soccer superstar? Well, Ives believes that Palantir has built an AI fortress that's truly unmatched. He's got his eyes set on a market that could grow to a whopping $800 billion. And guess what? He sees Palantir's share price surging by more than 70%, potentially hitting that $25 mark. So what's driving this enthusiasm? One word: customers. Palantir's AI platform, AIP, is turning heads. This platform is a goldmine, offering access to top-notch machine learning capabilities, language models, and risk controls. And guess who's knocking on Palantir's door? The US military and other government organizations are partnering up to enhance their analytical prowess. Palantir even secured a contract that could be worth up to $463 million with the US Special Operations Command. That's no small feat. But it's not just the government. Companies are flocking to Palantir too. Think pharmaceutical giant Novartis, who partnered with Palantir to create a data lake that could supercharge drug development. And you know what's the cherry on top? Palantir's customer count skyrocketed by 38% in the second quarter, hitting 421. And revenue? Well, it grew by 13% to a cool $533 million. The icing on the cake, billings surged a whopping 52% to reach $603 million. Now, let's talk cold hard cash. Unlike many AI startups, Palantir is already profitable. Yup, you heard that right. An operating profit of $10 million in the second quarter. But wait, there's more. Palantir's business model is a cash flow machine, pumping out $285 million in adjusted free cash flow in just the first half of 2023. With a robust balance sheet boasting $3.1 billion in cash and investments, Palantir is flexing its financial muscles by initiating a stock buyback program of up to $1 billion. And here's the kicker, this isn't just management playing it safe. Karp himself has weighed in. He's confident that the opportunity ahead has grown significantly and they're gearing up to capture it. So whether you're intrigued by Palantir's audacious ambitions, its impressive customer traction, or its solid financial stance, there are some pretty compelling reasons to consider hopping on the Palantir train. With Karp at the helm and Palantir's sights set on leading the AI revolution, who knows what heights this company could reach? The market's evolving, and Palantir is right in the thick of it. So fellow investors, keep your eyes on this one because the data analytics specialist might just be poised for a game-changing journey. Palantir Technology stock, bull versus bear. Now, we're about to explore the polarizing perspectives and get to the heart of what's driving the buzz around this software giant. Imagine a stock that splits opinions right down the middle. You either love it or you hate it. That's Palantir Technologies for you. This software company has managed to be one of the most controversial characters in the market stage. If you've been wondering whether to hop on the Palantir train or stand aside, it's time to break down the arguments on both sides and let the facts do the talking. Let's start with the bullish case. Picture Palantir as this ascending software juggernaut that's crafting the future of data analytics. The company thrives on several software platforms that it uses to craft tailored solutions for both government and commercial clients. Think of it as the wizard behind the curtain, helping organizations make smarter decisions, optimize operations, and uncover insights from data. Now, Palantir has deep roots in the US government. It was an early adopter of its technology, but here's where things get really exciting. Its potential with commercial clients. As data becomes the golden currency in the private sector, Palantir's US commercial customer base skyrocketed by 50% year over year in the first quarter, followed by another impressive 35% in the second. And guess what? They've only got 161 US commercial customers, so this growth story could just be a warming up. Hold on to your hats because Palantir recently dropped its artificial intelligence platform or AIP, and management reported an unprecedented surge of interest during their second quarter earnings call. They also mentioned that their new deals covered a whopping 30 different industries. Translation: the potential market they can tap into is gigantic. And guess what? The financials are looking pretty solid too. Palantir is raking in a cool $2 billion in trailing 12-month revenue. Plus, they're turning in profits under the banner of generally accepted accounting principles and churning out nearly $400 million in free cash flow. With over $3 billion in cash, no debt, and dreams as big as the sky, Palantir seems to be in prime position for a ride into new ventures. Let's dive into the bearish spin. Sure, Palantir might be doing some things right, but there are some voices in the crowd questioning whether they're working in the best interests of shareholders. First, their product isn't exactly the simplest puzzle piece to fit. It's complex software, and wrapping your head around their business model and how it stacks up against competitors isn't exactly a walk in the park. Plus, they're kind of tight-lipped about their customers. Most of them use the software for internal stuff, which keeps us in the dark. And then there's the stock-based compensation thing. While it's great for cash flow, it can nibble away at existing shareholder stakes over time. For example, They've grown total revenue by over 126%, but revenue per share, well, it's lagging at a mere 13%, thanks to a 35% increase in outstanding shares. Let's talk numbers. Palantir's revenue growth rate has been on a roller coaster from 52% year over year in the third quarter of 2020, only to take a dive to 13% in the second quarter of 2023. Now management's promising a 16% year-over-year growth for the third quarter, but it's a roller coaster investors might want to buckle up for. So who's got the winning argument? It's a showdown between bulls and bears, and both sides have some legit points. That's probably why Palantir has been a hot topic that's left the market divided. The ultimate decider? Well, that could be valuation. As of today, the shares are trading at a forward price-to-earnings ratio of 69. Analysts are projecting a pretty sweet 56% average annual growth in earnings per share over the next 3 to 5 years. Crunch those numbers and you've got a price or earnings to growth ratio of 1.2, suggesting that these shares might just be a tempting treat for long-term investors. So as the bulls and bears duke it out, it's up to you to decide which side of the fence you're on. Palantir is playing a high-stakes game, and whether it's a game-changing move or a risky gamble is a call only time will make. And that's it. We hope you enjoyed this video. If you did, don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one.